Hi, everyone. I'm Anita Sharma. Welcome to Market Call tonight. Our guest, Jaime Carrasco. He is the portfolio manager at Canaccord Genuity, taking your calls, emails, and tweets on North American equities. Our number toll-free, 1-855-326-6266. Our email address, marketcall@bnnbloomberg.ca. Our Twitter handle, @MarketCall. Jaime, your good luck for stocks. What's going on? We had a couple of tumultuous days, and today we saw some serious upward momentum. The U.S. Fed, yet again, stealing the spotlight.
Well, was it the U.S. Fed or the decline in interest rates? Volatility has to be expected. I've been saying that since last fall,
right,
when I became a little bit more conservative. Now, the cash that I had, that I did raise, I have put it into convertible bonds. So I'm quite happy sitting there. And I think going forward, it's important to understand asset allocation, not to be 100% in equities, but also have some bonds, have some cash, and have some precious metals.
You want to hedge against all this volatility that we're experiencing?
I think it's important because one of the things, everybody's focusing just on the market, right, but let's look around what's going on around us. Global PMIs came out today, and the global economy continues to come down, to slow down. You had the elections in Europe about 2 weeks ago, and what happened was, just like with the Trump election, you have that populist wave that continues to play out. People are tired of the political status quo, and they're selecting other choices. In a way, I've always said that history offers quite a lot of parallels, and the 30s is very similar to what's going on today. You had terrors, you had political shift, you have wars, you have economic turmoil. Everything's replaying, and I think at the top of it all is the fact that that we are witnessing a geopolitical shift, and to some extent, Trump is driving that. Look at what he's doing in the UK right now, saying, "Oh, we'll do our trade deals with the UK if you guys." But you got to leave the EU first. What he's doing to China, what he's doing with Mexico. You know, everything's about tariffs. Everything's about it seems to me as though that oil, the globalist, the global economic system that we had set up over the last 30, 40 years is definitely starting to change. And to some extent, I think that is the reflection of the fact that the current system just isn't working anymore. And I continue to argue that it's not working similarly to the 30s because the currency reserve itself needs to change. And a lot of people are starting to talk about that. They're saying, yeah, that some kind of a monetary adjustment needs to occur. The question is when. They're never going to tell us. I think all we can do is prepare for that.
All right.
And because of that, that is what I'm doing through asset allocation with clients in terms of how to position money to be a little bit more conservative and a little bit more aware of the volatility. And
part of the conservatism is, if you will, comes from the fact that you're upping your ante with respect to your holding in precious metals. The norm, if you are invested in gold, usually tends to be 5 to below 10%. You are now advising your clients to keep about 15% in precious metals. Is the bulk of that in gold, Jaime?
No, it's in the producers.
Okay.
In the producers, I think that the producers is the better play than physical gold. I see gold no different than holding U.S. dollars, holding Canadian dollars, or any other currency.
Okay.
To me, the speculation is in the companies because that's where you're going to get the leverage. Actually, when it comes to precious metals, that is the standard. That's what they say. They should have at least 5%. But the reality is nobody has any. And Western investors don't have any participation in the sector. It's almost nil. I don't think any Canadian pension fund has any. So because of that, I think at some point that light is going to come on, and I'd rather be positioned in an overweight in an overweight position so that to benefit when the money really starts coming in. And we are starting to see it. If you look at Bridgewater, the world's biggest hedge fund, they've added to their gold positions in Q1. It was announced. And I love Ray Dalio's quote that, you know, if you don't own gold, you don't know history or economics. And gold is part of the monetary system.
He's been going back and forth, right? Ray Dalio, the billionaire founder of Bridgewater. A few years ago, he started sounding the bells with respect to this is going to get really, really bad. He said it's going to be worse than the Depression, the Great Depression, but in a different way. He then backed off those comments, but here we are again where he says this volatility, this drama that we're seeing play out, it's going to last through his lifetime, through his career as a hedge fund manager and owner.
I would agree with that. You know, if I look at things from a historical perspective, I'm looking at the puzzles, how they're shaping up. And one of the things to understand is that when this change really starts to take place, it's never coming back. I think to some extent having a new currency reserve or having an alternative currency reserve by which we all trade is needed. And I personally think that when I look at the puzzle, how it's shaping up, it's going to be bipolar. It's going to be the Asians are going to be using their own thing. Like the Malaysian president said that they needed a gold-backed currency just on Tuesday, I think, on Thursday last week. So everybody's talking about we need a sound money, but it'll be regional because I think the U.S. and the U.S. dollar will be there. Europe, I don't know what they're going to do because that's a different mess. And then you have Asia that's working under China.
All right. And we have our viewers. We know they're waiting to speak to you, Jaime. They want to pick your brain with respect to if you're bullish on gold, you're bullish on gold companies, which ones to get into along a whole host of sectors. We're with Jaime Carrasco, portfolio manager at Canaccord Genuity, discussing North American equities. Our number, 1-855-326-6266. Welcome back to Market Call tonight. We are with Jaime Carrasco. Okay, we're sorting out some computer stuff.
Some technical issues.
Some technicals. We're not going to call them difficulties because your brain is also a computer, and we're going to tap that big time. Let's start with Jeff in Vancouver. It's an email that was sent to us, Jaime, with respect to AltaGas. Do you think, he wants to know, the dividend is sustainable? And adding to that, is this a long-term play?
Okay, first of all, so because of the computer issues, why don't we talk about the big picture, and then we'll talk about the companies themselves. Because I do like AltaGas.
Okay.
AltaGas, so when I look at asset allocation, I look at the different compositions of the portfolio, the equities I'm holding on to right now are dividend-paying equities, and AltaGas happens to be one of them.
You want to be paid to wait.
You want to be paid to wait, right? But also in an underweight position. Main reason is this. So go back to 08. At the beginning of 08, Enbridge, which is example that stuck in my head, the dividend was trading like a 3.5% dividend yield. By the end of 08, it was paying 9%. So it helped to wait in cash or some fixed income so that you could buy. That's how I'm positioned right now. AltaGas is one of those. We happen to like AltaGas. We do have it with a $20 target, and we are comfortable with the dividend. AltaGas, I like it from a Canadian utility. Look at the winter. Look at the winter we're having. Look at the summer we're having.
We're still having it.
We still have natural gas at the house on.
Yeah.
And I think that all of these companies that are capital intensive to build, that are paying, that have end users that will always get stuck with the bill, are a good place to sit on for dividend. And AltaGas happens to be one of those. And I think that within the composition of the portfolio, those are the ones that I like. The pipelines, the utilities, the REITs. AltaGas is one of the utilities that I happen to feel quite good about. The other thing about AltaGas is that it's gone through a massive downturn.
Yeah, we just took a look at that chart.
Yeah, if you can bring up the chart.
There's a huge dip, absolutely.
And I think at this point, it offers a really good entry point because of the downturn. Now, it's tied to the Alberta economy, which is a bit of a problem with energy. So that would be the only cautionary note. But for now, we feel quite comfortable about AltaGas's business and its market share.
Okay, I'm not sure if we can pull up the AltaGas chart, but to your point, this is an area where a lot of folks, a lot of your colleagues say, okay, it's looking very interesting. Valuations have come off quite significantly. Thanks guys, boy and gals, this industry, this sector has been hit hard. But now, are you starting to see a bit of an uptick? Is it too early to get excited?
Well, I think it's too early to get excited because of what's happened to oil prices. But I do think that
it's come down enough, this particular stock, for you?
Well, again, they're not tied necessarily to oil prices because they're not an oil company. They're more of a natural gas utility, storage, and transmission. Now, from that perspective, what I like about AltaGas, the same way that I would like an Ontario Hydro, though I don't own Ontario Hydro, is the fact that at these levels, there's always going to be a bare minimum level of economic activity. So guys like AltaGas will always participate in that. And because of that, they're there at that point. And I think right now, it offers a really good entry point from that perspective. Keep in mind, again, that I'm not overweight, right? So I'm holding back cash so that I can acquire later because I do think that the volatility will continue to play out. We don't know what Trump is going to do. We don't know how the politics are going to play out. And I think those, at some point, people have to think, wow, wait a minute. What's going to happen with Brexit now? What's going to happen with Europe? What's going to happen with Italy? Italy is the one that, to me, is ringing some alarms. Salvini seems to be going on his own way, and it's the Romans doing the Roman thing.
Well, it almost seems like folks are zoning out, too, especially with regards to what's what's happening in Europe. If you ask traders on this side of the pond, they seem really focused on the trade issues and the Powell pivots. So that seems to be what's dominating on this side of the pond. But let's bring in Mike from Sarnia. He's going to add to this conversation, Jaime. Hey, Mike.
Hi, thank you. Good evening.
Good evening, Mike.
So I'd just like to take a step back from all the chaos that you've alluded to in your conversation. And in Western circles, of course, we call it a triple top. Some of the commentators have made mention of it. And in Japanese circles, they call it three mountains. I'd be interested to know whether or not you think we're actually witnessing a significant triple top of consequences and subsequently a bear market. So do you think this is still a bull or do you think it's a bear? Thanks.
That's a great question, Mike.
That is a good question. But before we address that question, I want to address what he said at the beginning, this chaos.
Yeah.
I don't see it as chaos.
Okay.
One thing I was taught at Gordon Capital years ago when I first started in the business, one of my mentors said to me, look, money, the way to look at this business is to think of it, it's a blob on a platter. That blob is always moving from one side to the other of the bladder, and the blob is getting bigger and smaller. Just make sure that you position yourself ahead of where the blob is going. So to benefit as that movement is occurring. Markets are always rebuilding. Markets are always happening. You know, we go through these cycles and people tend to forget the cycles. Are we in a bear or a bull market? Well, right now we have differentiating signals. If you look at the bond market is definitely starting to signal that we're getting into a bear market. The stock market isn't, right? So we are, as we're going through this transitional period.
The bonds ahead of equities, though, that's usually the consideration, right? Well, the bonds usually call it before the equities do. And to your point, the inverted yield curve, once again, rearing its, I want to call it an ugly head because it's had investors really spooked. It has.
And one of the issues that we will have with regards to that is the fact that how do you benefit, right? That was one of, actually, I've benefited to some extent because a lot of the convertible bonds we bought in January, February, they were when yields had come up. Now yields have come down, so we have a nice little bit of a gain in those. Well, and you know, look at the Fed. The Fed is ready to reverse. Fred Bullard yesterday said we're ready to start printing, if not lowering rates at any minute. So I think they're preparing for something, right? And the question is, when the next one comes, how bad is it going to be? There it's a completely different discussion. I'm looking more at the fact that if you look at, for example, the shadow banking system, which in 2008 would have been a hit of about $20 trillion, right, which is why AIG had to be bailed out. Well, that has now grown to almost $56 trillion. So those are big numbers, right? And how do we resolve them? I personally think that we can't let it come down. We need to reset it in some way, shape, or form. And I think that's where the odds are pointing. And some people are talking about a monetary reset. And that's what we mean. How do we say, hey, I owe you $1 trillion, you owe me $1 trillion? How do we settle this out, right? And I think that's something that we also should be talking about. Bear or bull, I think we're heading for a slowdown. A slowdown is inevitable. So I think it's best to prepare and be cautious.
And yet they say you can't kill, bull markets don't die of old age. But there's so many opinions out here with respect to what's going on. Let's take another break. We're coming back with Jaime Carrasco. Our number, toll-free, 1-855-326-6266. Good news, his computer is up and running. We'll see you in 2 minutes.
Not yet.
Welcome back. We are with Jaime Carrasco, having a sip of water before we get into this great segment with Matthew from Vancouver. Hey, Matthew.
Hi, thanks for taking my call. My question's on Google. I think it's one of the 4 big tech to get hit with privacy evasion, but being able to Google anybody's name and address is just not cool for anybody, especially families. But if they get charged with a privacy invasion and it's financial, they're going to end up paying. It's going to cost them $100 billion. It's going to cost to get into driverless cars. On a brighter note, Matthew, and I've been on BNN 100 times and recorded it to YouTube. I'm not trying to be cocky, but I appreciate the opportunity. Thanks, BNN. What do you think of Google? Thank you.
Thanks, Matthew.
Well, if I own it, I would definitely be taking money off the table, right? It's funny. Again, look at what happened with the railways in the 1800s. Yeah. The U.S. has a way of breaking up anything that manages to gather more power than the government. And to some extent, Google has. Google has become an unbelievable story. Now, one of the reasons that I think we should talk about Google is because blockchain, right? how many people were looking at Google in the year 2004, 2003 after the dot-com bubble burst, right? I think at that point it was the time to really be finding Google, finding eBay, finding the companies that became what we have today in the dot-com. I'm looking back and I'm looking today at the blockchain, and I'm looking at the companies that are coming out. I sat down with Fidelity at a meeting just about 2 weeks ago and asked them about their blockchain platform that they're building. And Fidelity has completely allocated a full team to putting everything on a blockchain technology basis because it saves them so much money. So the technology will prevail. The technology, blockchain itself, is a great technology. Now, we had this massive run up a year, got 20,000 on Bitcoin. Everybody was talking about it. Then we have this crash, and now it's sorting itself out. Now, I'm paying attention to what's going on in there, and I happen to like it because I like the technology. I understand it. Now, what's interesting, though, is that Bitcoin hit 3,000 in February, and it just ran up to 8,000, and now we're having this next correction. I think at that point, I would be looking at taking some positions within it. Hive is the one that rings hard, the loudest, only because they are a miner of cryptos, of Ethereum, which is the coin that Fidelity and the financial companies are using to build their platforms. Now, having said that, I think that right now that's the area to be looking. But at Google and the big ones, well, they've had such a nice, huge run that now it's being questioned as well what they've been doing and how they've been doing it. And that, I think, is going to apply more political pressure. It'll also apply political pressure as the politics breaks up, right? Look at what's happening within Europe. Everybody's kind of saying, you know, that when it comes to this populist wave, if, like, who was it? Mike had asked if Matthew is correct. Everybody's wondering, well, what is Google doing? So governments are going to follow through on this populist wave and say, well, wait a minute, we'll take a look at what you're doing. So because of that, I think that I would rather be more bearish and taking money out and reallocating into other areas.
Yeah, the whole sector, the space really fell off a cliff after prices fell off a cliff. But folks who are bearish in this particular sector are saying, look, we're just in the early innings of this. And just because you may not understand it completely doesn't mean it's not around the corner, just like email. We only recently started using email, but if you look back 15 years ago when someone said, hey, I'm going to send you an email, you're like, what is that?
Oh, exactly.
Right?
Exactly.
And now
it's
you can't live
this thing
without
called
it.
the internet, right? But again, it's exactly it. You know, to me, the blockchain became a reality because of the internet, right? Because it really interconnects us. And I think from that perspective, the geeks are going after it and looking at it. So I would be looking there.
Okay, and let's look to the phones, Jaime, and see what Nizar has in store for us. Hi, Nizar.
Hi, Anita. Hi, Jaime. Jaime, Minnesota court recently rejected Enbridge's Line 3, saying it did not meet environmental standards. Now this resulting in inevitable delay in the building of the line. The stock had recovered, and it was headed higher, but had a stumble as a result of this decision. What do you see its prospects going forward, and is the dividend safe? Thanks for taking my call.
Okay, thank you, Nizar from Scarborough. Jaime, what do you think of Enbridge? Of course, a dividend-paying stock here. You were talking about the value of that earlier.
Thank you, Nizar. Well, first of all, I can't speak about the dividend because we're out of research, so I don't want to talk about the dividend, even though I'm not...
We're back to having problems, so apologize for that.
I'm not too concerned about it. You know, if you look in 2008, it was one of the companies that didn't cut. It's one of the stalwarts of Canada. Now, let's talk about the pipeline, because I think that's a negative positive. And why do I say that? One of the things about pipelines is that they're monopolies. I love the green movement because we're not building any. And because of that, the ones that exist are making some serious cash flow, and that will continue. Enbridge being one of the primary beneficiaries of that. So it's sad that we don't have the the political or whatever's going to need to get these pipelines built, because we do need them. But from an enterprise perspective, it's good because it further consolidates their monopolistic power of transmission of energy throughout North America. And because of that, I think Enbridge, no matter what, if you look at the current portfolio of pipelines, there's a lot of mileage and a lot of money, and people are going to be shipping gas throughout, and we definitely need it right now considering the weather.
Absolutely.
Yeah. So Enbridge, I'm quite comfortable for the dividend. I can't assess that, even though I'm not personally concerned, but I would have to really take a look at it. But right now, it's good.
All right. Well, I'll tell you what also is good. No concerns here. 2 of your 3 past picks. You're really putting your money where your mouth is with respect to gold companies, and we'll tell you what we mean next. Stay tuned. Jaime's past picks are coming right up. Welcome back. We are with Jaime Carrasco. Now we get to flush out the gold chat even more. Again, like I said before the break, you put your money where your mouth is. A lot of folks aren't bullish on the companies. They want to buy spot gold, the bullion itself. But this is paying off for you. Franco-Nevada up 15% theoretically if you were to purchase this last August.
I've owned it for the longest time. If you bring up the long-term chart of Franco.
What would you like, a 5 or a 10?
5 years is fine. This is, let me back up a bit. Let's talk about how I choose the gold companies, because I think you have to be, this is where the stock picking I learned at Merrill Lynch back in the late 80s really is kicking in. Now, 4 main criteria: good solid management, will bring good solid management, low cost of production, reserves on the ground, and in geopolitically important where the properties are, because you don't want, if in Russia, are you gonna trust it to be there, right? Now, Franco-Nevada is not a producer; it's the first royalty to be formed, right? So this is the one company that I put in everybody's account. It has a dividend, and that dividend has been increasing slowly, but it's set to increase with the price of the commodities coming up. It's also not 100% gold; it's also silver, copper, oil, so it has. You
got a bit of diversification in there.
That's right. So that's why I have this as one of the most conservative stalwart. Now, over the last 3 or 4 years, as I've held on to my positions, asset allocation, and when we did this call, I think it was a year ago, that's when I went up to 15%. That's why I had these 3. Those were the ones that came out, and Franco-Nevada, I really would recommend it to anybody as part of that small percentage.
What about Detour Gold? This one theoretically up 20%. Are you still in this holding?
Yes, I am.
Okay.
I'm also, it's funny because both of the next companies, there's some really serious money coming into them. So one of the things that I like about the sector is that in a very, very muted way, let's say stealth, serious money is coming in. And with this one, it's Hank Paulson, I think it is. It's one of the big Wall Street players who forced a management shakeout. And he's pretty well building a position now. Again, this is a low-cost producer in Canada, with I guess in terms of Paulson's attitude, it wasn't the best of management. But again, it's solid assets with big reserves on the ground, and it's nice to see that the recognition by some of Wall Street's smartest coming in and assisting in supporting the stocks.
All right, so what puts a dent in your overall performance as far as these 3 stocks are concerned is America Silver. Here you're off about 17%. First question, do you still hold this? Second question, what happened?
Okay, first of all, yes, I still hold it. More importantly, within the composition of the companies themselves, I actually added this at a very low prices, because one of the things I've been doing is taking profits and rolling them over. So maintaining those same percentages, like asset allocation with the overall portfolio, I also do it with my companies. So one of the companies that I did take money off was Franco-Nevada. Kirkland Lake is another one that my average cost is about $6, and it's sitting at $45 now. So
you're playing with house money now.
So exactly, and because of that, I'd like to keep Kirkland Lake at about 7% overweight within the composition. So as soon as it jumps too much, I take money out and I keep buying into this. Now, America Silver, I still have it. I love the management. Keep an eye out on this company, because what these guys is about management, first of all. And the execution that management has had has been unbelievable. This is the only junior that actually purchased a company in this last go-around. Right now, they're a low-cost silver producer. Some people say that they're a base metal producer, but they just bought Pershing Gold in the U.S. Now, what happened on the decline was they got caught in the shutdown of the government in December.
Right.
Remember when the government shut down?
Government shut down.
Well, they were awaiting the permits to do the purchase of Pershing. That took a bit too long.
So that delay hit them.
And it delayed. However, what's come out of that is Pierre Lassonde, one of Canada's top mine builders, is now their second biggest shareholder because he was a big shareholder of Pershing. He realized the management team that's behind it, and Sandstorm is now also the biggest shareholder, one of the big royalty companies. So I think this company going forward will continue to acquire and grow through acquisition. The cost of production is like negative right now, so it's actually one that I'm very, very bullish on, and it is my personal biggest position within the sector. Okay,
brilliant. Jaime, thank you so much for that. Let's take another break here on Market Call Tonight. You're watching BNN Bloomberg. We are getting to your calls next. Our number 1-855-326-6266. All right, we have a lot of calls to get through here, Jaime, including Alex in Cambridge. Hey, Alex, is it Cambridge?
Hi, thanks for taking my call.
You bet.
So my question is about NVIDIA. I used to own the stock during the Bitcoin craze, and so I made a decent pile of money from that one.
Nice.
But it's come back pretty much to my original buy, which is around 136. Jumped up today, obviously. I was looking to get back into it around 125, but I was previous support during the December drop. But I'm not really sure what the bull thesis is now on NVIDIA, now that I don't think it's going to really benefit from any kind of crypto boom again, and the gaming segment has not been fantastic. So I wonder what you think about it here.
All right. Thanks, Alex. And I want to say it's nice that it's coming back for him, not that he potentially lost, but yeah.
I played NVIDIA a while ago, and I wrote it up for about a 50% appreciation, and then I let it go. However, we've had this pullback.
Right.
One of the concerns I would have, so I was reading the balance sheet for Hive, who actually they bought a lot of NVIDIA equipment. And one of the things to understand is that with the bust that we've had in the blockchain, there are a lot of facilities that are not in high demand right now. Now that benefits a company like Hive, who is looking to mine at cheaper and cheaper values. But the producers and the hashing facilities, I think we went through this massive build out, and now NVIDIA and its stock is suffering because of it. So it'll be a while before that really comes back. So in my opinion, I would more, if you want to play NVIDIA for the simple reason of the crypto craze. I would look looking at the ones that are developing the technology of the blockchain itself instead of the computer background of it.
Okay, brilliant, Jaime. Thank you. Let's get to a tweet now from Mazi. He says, "Hi, Jaime. What are your thoughts on Whitecap Resources?"
Whitecap happens to be one of the few Canadian oil companies that I like, because they are a Canadian company, but they don't produce in Canada. They produce mostly in Europe, and so they benefit from higher Brent prices. One of the concerns I have within oil, and I've been underweight for quite a while and sitting mostly on foreign companies, is the fact of what's going on with the oil prices in Canada and the fact that we don't have the pipelines. The differential, and that differential has gotten even wider. Also, the currency has gotten even wider. It's funny because I was chatting with a client and he was saying that the U.S. dollar was so strong, and I said, well, if you look at the USDX, the index, it's really sitting around 97, and today had a decline. But what he's looking at was just a Canadian to U.S. dollar. And so what I pointed out to him, back in 2011, when the dollar was at par, gold in U.S. dollars and Canadian dollars was at $1,900. gold in Canadian dollars is at 1,800.
Right.
So that should give you a really good indication of what's happening to our dollar. And to some extent, that is driven by oil because we only have one buyer. The pipelines all go north-south. And because of that, Whitecap would be one of those that it's outside of Canada, and I'd rather have earnings coming in from abroad.
All right, let's see what you think about this final stock for this segment. John in Saint-Julien, Quebec, bonjour.
And to both of you, Jaime, my question's on Guyana Goldfields. As the name applies, I believe they're in Guyana. They've had two major problems, I believe. One was with the board of directors, of which they've cleaned house. The second one was with a proxy fight that's been resolved. The mine, I believe, has great grade and results in the ground and has been operating for a number of years. So do you like it at this share price, or would you own it? And if I may have a consensus praise for the lovely lady.
Oh, thank you.
For analysts, thank you.
John, I don't know if you're going to think I'm lovely because our computers are down. I'm sorry, sir. I can't give you consensus. If you leave your email with our producer, maybe we can get that for you via email. But what do you think of Guyana Goldfields?
Hello, John from Saint-Julien. How are you? Guyana Goldfields. Guyana Goldfield hits 4 of the check marks except 1, right?
Okay.
First of all, they seem to have good reserves on the ground. Geopolitically, Guyana has always been a country that I've worked in. I've been involved on the oil side. But again, there's questions about the government. They're going through an election again. So there's always some of those problems. Execution has been a bit of a problem in terms of these issues, and that pertains to management, which is one of the reasons why I haven't really jumped on board, even though I don't mind Guyana the one thing about Guyana, sorry, and I should say that, is that it's the one British colony in Latin America. They speak English, and they work within our legal system. So, and I trust that. However, the management at Guyana Goldfield has had issues, and that's one of the reasons why they didn't hit the check mark. Cost of production seems to be low. Would I take advantage of this decline if it was any other company? No, I don't think so, because again, it doesn't have that check mark, and because of that, I tend to shy away from Guyana Goldfield. Okay,
so no check mark for Guyana. Let's see if there's some check marks in our future as we head deeply into the show. Jaime, thank you for this. We're coming back. Welcome back to the phones, Jaime. We have Peter standing by from Vancouver. Hi, Peter.
Hi, thank you for taking my call.
You bet.
Anita, the actress, look alike.
Oh, thank you, sir.
Jamie, can I ask you about Suncor? Warren Buffett bought it, but this Suncor seems to be slowly dropping since it reached 46 recently. They got many good metrics. Is this a good time to enter this blue chip stock? Thank you very much, Jamie.
Thanks, Peter.
Thank you, Peter. Well, within the oil composition, Suncor would be one of the few Canadian companies I would include because of the dividend, and they're such a big company. Now, they had a nice run up as oil prices started going higher. If you own it right now, I would either be cautious. If you're overweight, definitely reduce your position. But if you own it, I would be cautious because look at what's happening with oil prices. And those are being driven more by the global economy. The global economy continues to slow down. So how much of a slowdown are we going to have? It will affect Suncor, right? And because of that, I would be a little bit cautious. Again, I have about a 5% weighting in energy within the income payers. And it's an ETF that is the 15 biggest global oil companies. And within that ETF, they're able to write calls, so it gives me a little bit higher yield, right? And that's the only reason why I hold it. And Whitecap also has a dividend. But again, if I was starting to build a Canadian positions back, Suncor would definitely be the place to go to, because that's where money will first drift into, and we saw that in the first rebound that it had. So if you bought it back then, maybe if you have some profits, take some money out. If not, if you have just a little bit, wait and see where it settles and average down, because Suncor will be around as an important company of the Canadian economy. Okay, another important component of the Canadian economy is housing. So let's turn the conversation over to REITs, and for that, we'll bring in Catherine from Toronto. Hey, Catherine.
Yes, good evening, Anita. It's always a pleasure to see your friendly face.
Oh, thank you, ma'am.
I have a question for Jaime. I would consider to buy Plaza Retail REIT, PLZ.UN, in a tax saving account, and I would like to know if the dividend is safe. It's a small cap, but would it have a potential of growth in this economy? Thanks a lot. It's nice to see you. Have a good night.
All right, Catherine. Always great to hear your voice. Thank you.
Thanks, Catherine. If you're looking at, again, I don't know, I can't talk about Plaza REIT because I don't have the research right now.
The dividend
the
per
dividend,
se, yeah.
the dividend per se, but let's talk about REITs as a component because this is, within the REITs is one of the areas where I still hold a nice position, but how I position it is be more strategic. So, first of all, within the Canadian REITs that I own, I want to make sure that I'm more balanced within the industrial base of Canada. So I'm staying away from things like Artis, which has a lot of Alberta-based real estate. Even though right now we should probably be looking at pushing back in there, but I haven't made those tactical moves.
You want to catch it on the way up, though, right? You don't necessarily want to be there at the bottom.
No, right now.
Don't be greedy. You want to see the trend move higher.
This is very true, but right now I'm playing defense.
Okay.
So I'm holding on to the best REITs that I can find that are going to deliver what I'm looking for. One of the things I'm looking for from my income component is income that's coming from outside of Canada. So because of that, the Dundee, sorry, they've changed the name now, the Dream Global, right, which is coming from outside of Canada. And so I know that the dividend will be not in Canadian dollars, but in US dollars. And because of that, I'm very comfortable with the dividend. In Canada, I like the apartment REITs. So there's one, and I can't remember the name. It doesn't come with the yield. Canadian apartments, but the dividend is around 3%. So there it'll be more gains. And I'm looking at what's happening in Ontario, where people need rentals and we can't get any. So they'll benefit from that. And then some of the industrial things. I think as manufacturing comes back to North America, as Trump wants, I think the manufacturing REITs should do well, and we should sort that out as well. Also U.S. I would be looking at the U.S. more because of the Canadian dollar versus the U.S. dollar.
And mortgage rates coming down.
And mortgage rates coming down, which has definitely helped them.
All right. Jaime, let's squeeze in one more call. Dave from Toronto. Hey, Dave.
Hi. I wanted to ask about Inter Pipeline. It's a stock that you mentioned in the past as a core holding, and I wanted to know, I'm interested to dive in because of the dividend growth. I know that in the future, because of capital investments, that dividend growth will be very low, but would you recommend a person to invest in the stock for the next 5 years? Because I'm willing to take a discount now. I guess in 5 years, their plant will be up and running, and the stock will be maybe a bit higher because I think it's discounted. And if you were to buy a pipeline, this one would be it, right? Because its price to earnings ratio is lower than compared to the other ones.
All right, thanks, Dave. Dave's also a young investor.
And Dave has done his homework.
Yeah, Dave does his homework, that's for sure. He's also told us in the past he's a young investor. He's got time to play this out.
Right. So definitely, I would definitely recommend that to begin taking a position in Inter Pipeline or any of the other pipelines. However, be strategic. Don't put all your money in right now because, again, think of the market and the overall, whatever's going to happen over the next year, I think the dividend might get higher, not because they're increasing dividend, but because the price of the stock is coming down. And because of that, that's my position right now. With a lot of the dividend payers, I'm thinking that the market might get hit. And what happens when you have that liquidity run pension funds, mutual funds, they sell whatever's liquid. So what ends up happening, like Enbridge in 2008, by the end of the year, you were picking up 9.5% dividend, and it was a great entry point when everybody was selling. So because of that, I would definitely consider Inter Pipeline. I own it within the portfolio, but I'm looking to buy more down the line, and that would be my strategic positioning with regards to any other pipelines or any of the dividend blue chip stocks that I've been buying.
Let's see if more of those questions come up after this break. Our number toll-free, 1-855-326-6266. And one note, if we didn't get to the information you wanted, i.e. consensus tonight or the dividend payouts, just send us an email, marketcall@bnnbloomberg.ca. We apologize for the technical difficulties, and we'll email you back by tomorrow. Thanks. All right, our final segment of calls, Jaime. Let's pull the trigger here. Mustafa in Toronto. Good evening, sir.
Good evening to both of you. My question is on Encana, please, ECA on TSX. I would like to know your guest thoughts on this company and why is it so volatile, going to 25, coming to 7, and then with that much range. And if you want to take a position, at what price you will enter? Is it a good price now to enter? I hang up and listen to your comment. Thank you.
Thank you, Mustafa.
That's a good question. At what point would I take a position? And I think that's a systemic answer, right? It's hard to take a position on in Canada because it's natural gas and energy. And again, we're beholden to the U.S. to sell them our product, and they're currently buying it at a huge discount to what they can get West Texas WTI, right? So because of that, I would want to see a definite turnaround in the price of commodities to start moving higher before I even consider begin taking a position. Because if you need to own energy, go international. There's a lot of good quality companies that pay good dividends.
Okay.
Right. That would be my advice if you really want to play the energy sector.
Let's wrap this up where we started, a gold conversation. Paul from Halifax is focused on this. Hey, Paul.
Hi. Thanks for taking my call. My question is, I can recall when gold was like 1,400 an ounce back in late 11, and then I recall seeing Jamie pounding the table going, hey, like the gold's not there, and all the big producers have now failed miserably, like Gold Corp, Barrick, and, they were all up there high, but why is it not now that gold's at 1330? And they're still kind of stuck in the penalty box. Could you answer that, please?
I can.
Thank you.
I can. Can you guys bring up a comparative chart of Kirkland Lake and Gold Corp?
Okay.
Or Agnico Eagle and Barrick? Either one of those two.
Just give us a second. We'll get that up.
Now, first of all, yes, the gold producers are nowhere near where they've come down in a massive way because nobody's coming into the sector. There's no money coming into the sector.
We'll start with spot, or there's gold futures, yeah.
However, I think it's important to understand that right now that's the opportunity. The opportunity is that gold companies are not reflecting price of profitability at 1,300 or 1,800 Canadian.
Right.
Right. So if you look at a company like Agnico Eagle, I think it offers quite a lot of entry right now in very little risk because they're producing about 650 Canadian, and we're sitting at 1,800. So that's why Agnico continues to move. Now that's the point. This is what I wanted to point out, that it has been about stock picking. So if you look at Kirkland Lake versus Gold Corp, you look at Agnico. Agnico was $22 in 2015. Now it's sitting at 55. Kirkland Lake, same thing. So it has been about good, solid stock picking. So those four choices really do sort out what's good. To me, Barrick and Gold Corp, I don't look at them because to me they're like IBM versus Microsoft circa 95. I'd rather have written Microsoft than those guys. They will make money when we get back above 1350, but until then you're playing a waiting game.
Okay, and we're not waiting any longer for our next break. Your top picks are next. He's Jaime. I'm Anita. Stay tuned. All right, top picks time. Charlotte's Web and Halo Labs. You like these both for what reason?
Okay, let's. Having moved over to Canaccord, they've been the leader in the cannabis sector, and I find that sector amazing. Now, having been at Scotiabank, nobody wanted to look at the growers and this whole industry. It's legal. Right. However, so I've missed the growing phase. Okay. But these guys are extractors. What I've noticed is that this is the bottleneck. So what's happening is that the food business wants to come in, the pharmaceutical industry wants to come in, and what they need is the oil that has been extracted with either CBD or THC. Both of these guys are CBD. Charlotte's Web, I would highly recommend anybody to do the documentary, Charlotte's Web CNN documentary, to understand what they do, because it's CBD oil that actually works for medical purposes. And that, to me, is they're going after that whole opiate industry in the U.S. that really needs some cleansing, it seems to me. Now, Charlotte's Web, they've just crossed 80 million in earnings. Both of these companies, their earnings trend has just begun. Okay. So no matter what happens to the market as a whole, I see it more like alcohol in the 30s when prohibition was over. So there's room to grow. On the other side as well, because it's food, medical, and a lot of other industries coming in, there's way more earnings growth to be had.
Okay, let's wrap round this out with Metalla royalty and streaming.
Metalla is a new addition for me. I switched most of my silver wheaton into it. It's a new up-and-coming royalty. Now, what's happening, these guys have financed quite a lot of projects. Those projects are starting to kick in, so the dividends have kicked in. So from this, we should get good, solid dividend growth as all of those different projects around the world, all of those mines are started up and then they get paid, but also capital gains going forward as the price of gold and silver move. So this was my replacement for silver wheaton within the portfolio, because silver wheaton will not grow its dividend anymore. They're at that stage where they're just pay out as the mines that they have financed will continue to pay. This is an early silver wheaton that's just growing its strength. I particularly like management. I got involved early on at the IPO because I liked the people that were coming in, some serious money, Alan Day, and some really good people that were investing in it. The last money raise they did at 80 cents, that's when I got involved with clients in the portfolio.
Okay, brilliant. Jaime, we covered a lot of spaces today, especially admirable, given that we had no computer data. Again, email us if there is some data that you want to have fleshed out for you. Always a pleasure to see you, sir.
It was great. Thank you for having me back.
It's always great. Thanks, Jaime. I'm Anita Sharma on behalf of the Control Room. Have a great evening, but don't forget, consult a qualified financial advisor before you execute any trading decisions.